Joining us now, Jim Paulsen, Chief Investment Strategist. Best 8 years of my life, Mac, high school, you know. Anyway, let's get to Jim Paulsen, equity strategist at the Leuthold Group. You have been sort of okay for weeks now in terms of the prospects for not hitting new lows. And that's sort of been borne out, Jim. Are you surprised it's actually the best month in 40 years, whatever it is?
Well,
45?
you know, Joe, early on I wrote about this is a bear market at warp speed, and everything has been at warp speed. I mean, the market fell faster, almost 6.5 times faster in the first 23 days than any other in the average bear market in post-war history. And it's now kind of recovered faster than almost any other one. You've also had the economy, of course, fall faster and quicker. You had policy officials respond faster and quicker. You had the VIX blow out faster and then recover faster. This whole thing is sort of at warp speed. And so maybe I'm surprised, no doubt about that. But on the other hand, it sort of fits the narrative of how fast this crisis is moving, both on the downside and the upside, and has been throughout. So maybe it's starting to feel more normal, if you will.
Do you think, Jim, there's still a chance that since it's a novel virus, then we don't know that much about it? We're not even sure of our immune response. There's a lot of uncertainties. You think we could go back down in warp speed to test if everything, you know, time dilation, length contraction, all? I mean, the singularity, everything's happening quicker and quicker, which is true. Yeah. But we could head back down just as quick as we've gotten back here, don't you think? If we have some setbacks, or it turns out that this virus is different in some really bad way for the world?
I think you're right, Joe, but I fully expect setbacks, and I think that's okay. In other words, if we have evidence that the cases are spiking again, even later in the fall, I think the market can handle that, those kind of things. I think we're more prepared at this point. Our hospital capacity is more prepared for that.
Right.
We have a larger percentage of the population which might have some immunity. So I think that's okay. But I don't disagree with that in the sense that if the virus were to mutate into some new form or become more lethal, or maybe more lethal for a broader array of the population rather than just old and compromised,
that'd be bad.
That would be a very significant development. You bet we could go down in a hurry.
What if it's just that we don't return to a normal that generates enough revenue to keep normal businesses open? What if we, and you know, I don't know if that's going to happen because I think there's a lot of pent-up demand. I think people are going to really want to go out to restaurants and do all the things that we used to do. But what if you just can't? Right. What if the separation and the number of tables and the seats on airplanes? What if you're down 50% in revenue for an extended period of time because things don't return to normal, and we're not at a tipping point of profitability for 90% of the companies in those businesses?
Well, if the economy, if we're down 50%, we got a problem, no doubt about that. That's unsustainable, and we've got further down to go. Then you could paint a picture, whatever you want, but I think it's not uncommon, though, Joe, that to have come out of a recession and not have everything come back right away in the economy. That's not anything new. If after the inflation broke in 1980, we didn't have energy, mining, or agriculture for the entire next decade. After the 1990s real estate crisis, we didn't have commercial real estate for the 90s. We certainly didn't have any tech IPOs in the early 2000s. And we lost a lot of things after the 2008 crisis, many of which never came back. And we had a lot of things that remained far below normal, if you will, after that, and still do. And the unemployment rate always takes a long time to come back. None of that prevented the economy from progressing or the stock market from rising in those previous aftermaths. And even if we don't, it's going to take a while. There's going to be things like airlines that might take a long time to come back. But that doesn't mean that the stock market is necessarily not already back in a bull run, just like it has been in the past when you exit a recession and it takes many years to get everything back going again. I think that's not any different.
Well, I don't know, Jim. You can't help human nature. I mean, we're at 2930 or 2940 on the S&P when things were perfect, and when we heard it was the greatest economy in history and the lowest unemployment rate in history, and wages were rising, and all the things we talked about in Davos. I mean, we were in the catbird seat, and we were only at 3,400. So why do we deserve to be? Why do we deserve to be at 2930 when a perfect world only gave us 3,400? It just, I don't know.
Right. Well, let's say just two things on that. One is the broader market, Joe, is still a lot cheaper. When you've got, if you go outside the S&P 500 or just the S&P 500 large cap growth, if you go outside of that, you're talking about small cap stocks, cyclical stocks, high beta stocks, international markets that are still down 20% plus, 20 to 30% from their highs in a lot cheaper state. But even the S&P 500 right now, it sells at a blended multiple trailing and future of about 21 times. Sounds high, but that's the same blended multiple this thing sold at in late 2017, early 2018. The difference being, at that point, it was a 21 times multiple on a very healthy, robust, record-setting earnings level, where today it's a 21 multiple on a very depressed earnings level. Back then, that multiple was contrasted with a 3% Treasury yield. Today, this multiple is contrasted with a 0.6% 10-year yield, and massive liquidity and monetary support, massive fiscal support. So I don't know that necessarily being back within 15% of the old high is a violation necessary of saying it's grossly overvalued. We're also doing, there's also the risk that things turn out better than expected in terms of the virus curve being bent and the economy being turned back on and treatment possibilities arriving. So I'm not saying it's not without risk, but I also think that we're still really climbing a wall of worry, and we've got massive support under this thing and the economy, bridges to see us to the other side.